Alright guys, I'm back with another video. Okay, hold on, let me open my live first and then I'm gonna put on, there we go, 1 second. Video, that was me. Let me put on the chat here just in case somebody pops up out of nowhere. We know who they are. Okay, here we go. Hi Emmanuel, what's up? You seem to be first. Like, what's going on? Not sure if you're a friend or foe over here. A friend or a foe? But thank you for joining though. Whether you're a friend or a foe, we welcome regardless. Alright, so let me just kill some time here. Just again, let's do the price point because people seem to care about price, right? Action and all that stuff. So of course tomorrow is going to be closed because of Martin Luther King Jr. Day. So they're going to be no trading. So the next trading day would be on Tuesday, but the price will still be at 14.75, and of course, like after hours, they went up a little bit. Okay, but if you look at the chart exchange right here, you would see that there's continue to have a short interest of let me see. If you look at this one right here, currently outstanding shares, market cap, off exchange, on exchange, a little bit more than usual, but it's still, close to as 50% as possible, meaning that, half of the volume comes from, half of the volume went off exchange for this particular stock. And then what other data points do I want to point out here? Of course, in 5 years, they've been close to double, but it's been kind of declining, in price, which is, hey, it's the nature of the game, I guess. But if you look at the volume that is being traded, it's non-existent, right? So if people are panicking left and right, my point is that it should have been a lot more volume coming in. Anytime there's volume coming in, it's always a buying volume, right? It's never a selling volume. If you look at the, trading view right here, see, buying volume left and right, buying volume left and right here, just this little 3 candle. Or at least this volume right here, you see that the price just keep, like, again, when there's volume, you see this pattern of price rocket up, right, like crazy. And it's just the testament of people are holding, right? And if you look at the, what is it called, on balance indicator, on balance volume right here, you could see that anytime there's volume coming in, there's not enough selling pressure to keep the on volume balance less than what it was before, right? It's always like a staircase type thing. If you look at this one right here, so the price movement on the volume itself doesn't add up, so to speak. So it means that people are holding, right, retail or whatever, and the price movement is, again, it's due to the illiquidity of the stock, obviously, or the amount of stock that is being exchanged hands, it's very low, and that's why the volatility is high in that sense. Illiquid, right? I don't know if that's a risk of delisting. That, of course, that's what people are seeing now. But again, I am not qualified enough to say that. Hi, Lionel. thank you for joining. Do you think GME will go below 10? I have money on the sideline. Just got a feeling about GME manipulation. I know, like, I can't predict any price movement. Obviously, that would be amazing, right? Because I'm a long-term investor, right? And so any price point below what Ryan Cohen got in, which is around $20 or $22 right here, back 2 quarters ago, is a good price to buy, in my opinion, right? But I also, you see a lot of negative news coming in, so of course they're going to take advantage of that to try to make sure the sentiment is down. But as far as the price target, I wouldn't want to kind of predict anything like that, because, like, again, nobody knows where the price is going to go. My theory is always, to look at the broad market, like, S&P 500, if you want to follow those type of movement as well, because, again, if people are panicking about, the sell-off that is doomed to happen, right, anything will be selling off as well, including GameStop. And again, with this negative sentiment about the NFT marketplace, I bet you anything they're gonna, try to create that fear within this market right here. But I always ground it in knowing that the balance sheet is still the same. Nothing has changed at all, you guys, even with the NFT marketplace being shut down. Of course, it's a very, disappointment, on my part, but they're doing the best that they can to try to protect the asset that they have. And honestly, in my opinion, of course, to me, they have the trademark still. I bet you anything, right? They have the ability to, once it's on the blockchain, it's there forever. Technically, it's still there, but of course, it's not going to be under GameStop. Perhaps GameStop could sell that platform to some other crypto company, right? So again, they still own that platform, so to speak. If they want to sell it to a third party who would be able to deal with crypto later on, they could do that. That's just my speculation, right? It could be gone forever, just like Moran was saying, which that's another speculation here. But in my opinion, or in my experience in crypto, once it's on the blockchain, it's on that blockchain forever, right? And until that blockchain is closed in some way, of course, like on Loopring and what is it operating on? You could still open Loopring wallet and you would still get that whatever you bought to that. But I could do a video showing you after they shut it down too, whether it's true. So I'm curious to see it myself, because I did buy some, NFT. Like, it cost me $10. I bought one song from that and NFT marketplace, and just to test it out, and then we'll see if it's still there, after, NFT marketplace closed down. And I have a feeling it will still be there, as long as you have a Loopring wallet, you could still get your asset. Whatever you bought in there, it's still in there. And again, this is why people don't realize what's going on here. But of course, with this announcement that they're going to shut down next week, it's not going to affect the balance sheet whatsoever, right? Yes, it's a black eye, so to speak, right? Because, Ryan Cohen did technically, I wouldn't go that far to say that he failed at that. No. Because again, at least he tries something, like Morantz was saying. It's like, when you fail at something, you want to get up and get better at it next time, right? You don't just lay down and die, lay down and file up for bankruptcy just because you failed one time in your life, and, leadership in GameStop, I'm sure any of you who invest in this company would agree with me that they're doing the best that they can to maximize shareholder value as much as possible. Again, this is just my opinion, right? You could say it's hopium or whatever, but again, I'm looking at the data just the same as data as it was ever before. And when I see stuff like this, obviously, there's an asymmetrical, sentiment here. There's so many people who are so negative about this stock, and it's natural that you have the opportunity that there's a small chance that these people are wrong about GameStop, right? Well, it's a large chance, but they seem to think it's the nail in the coffin, so to speak, right? Of course, the nail in the coffin for some people, like that bow tie nation guy, he was saying it was because of the revenue coming down 9%. Right, but because they were closing down stores. Of course, if you just look at the top line revenue, sure. But look at the gross profit. Like, you see, this is why they don't want to point it out to you. Okay, give me a minute. 1 second. Let me go and grab something to drink real quick. All right, sorry about that. Yeah, so I mean, if you look at this coming back to the balance sheet stuff, if you don't like the number, of course, don't invest in this company. I think, this company has so much to offer, and to give them only 3 years to try to make this the right way is not the right amount of time here. To build an empire, it doesn't take 3 years to build an empire here, right? It didn't take, hold on 1 second. I feel like I'm hearing something here. Okay, it's probably something else. Oh, okay, it's my phone. Sorry. So it doesn't take Amazon 3 years to build the Amazon today, right? I don't think it take any company that is upcoming like this to build an empire in 3 years. It's impossible. So, Ryan Cohen has done an impossible task to turn this company around the best way he knows how. Yes, it's slow in many people's eyes, but I think it's like the right amount of time here. I think it's a lightning speed when it comes to like business wise, right? You don't take this company and then just turn it around in 1 year, right? And then make it as sound as it is today. It's solid. The way that the structure, that they structured this company to stand to benefit so much. And there's a reason why we've been cutting like crazy, and now people are just beginning to cut their job, right? To cut their footprint. We again, I keep saying the same thing. is that we've done the hard stuff 3 years ago. So now we're standing to benefit from it. And even if we need to cut a little bit more in order to to prevent the bleeding, we would still benefit from cutting the workforce, right? Because again, what people don't realize is the fact that working class is going to be hammered by this whole debacle here, right? Global demand is coming down, and of course, like, this is why people are stampeding to do the right thing now when they should have done that 3 years ago. And I think leadership has timed it perfect in order to stand to gain massively when the market comes down, right? When you have billions in your disposal, you could do so much at that time. Currently, everything is still high, right? Stock market's still up. Obviously, we're not going to want to move too much, right? But all we're doing, just day in and day out, to try to operate at the at least free cash flow positive. When we could achieve that, it's already a autopilot, so to speak, already. We don't have to exert too much energy, money, in order to move forward here. And then, of course, it's also being prepared for what is to come within a couple years here, right? Speaks to what leadership is trying to do. And again, to be aware enough too to say, hey, certain thing has to be put to an end in order to protect the rest of the asset of the company, right? Because the regulator, are just, they're not having any clear rules. And, the fact that we have Bitcoin ETF right here kind of speaks to, I guess the industry in and of itself. It's just that it's too late for Ethereum base yet, right? So perhaps it's another few years before the Ethereum base is being legitimized in that sense. Who knows? They might outright ban it, right? But at the very least, we're not at odds with the regulator. So that's my 2 cents on that whole thing. Who's this? Window or whatever your name is. Crime is always what? Before earnings. What do you mean crime's always before earnings? Could you elaborate a little bit, please? What crime are you talking about? But thank you for joining though. So yeah, I mean, in 2 months we're gonna find out whether the balance sheets is affected by this whole NFT marketplace or not. And in my opinion, this one doesn't include it. There's no digital asset on this balance sheet whatsoever. It hasn't been on this balance sheet since the third 2 quarters ago. So for sure, I know that it's not in this balance sheets right here that we are seeing right now. I need to go double check though. I could verify it for you later on, in my other, feature video here. But yeah, if it affects it, of course, how much is it going to be affected by, the revenue side? Currently we don't have any penalties. We don't have any, just the fact that we're closing down that platform. There's no penalty associated with that whatsoever. Yes, we did spend money, and those are the money that we have to spend. It's not like we're borrowing, leveraging ourselves in order to make that money, to take that money in order to make this platform possible. So the money that was burned, quote unquote, to make that platform was a one-time deal, right? So yeah, I mean, I'm still bullish on this company. Like, nothing changed at all. Negative sentiment will come, of course, because of that. But I just wanted to kind of make sure that you realize that we're cash flow positive here. 4 consecutive quarter already. And I will keep bringing it up until, people realize what free cash flow means, that the business is actually viable here, that we don't just lose money left and right. And if you don't know what free cash flow is, just Google it. Why is it important to have a free cash flow? And free cash flow to the tune of $250 million, right? That's something, right? Why is it less now? Well, because we have expenses to take care of, As far as interest expenses right here, I bet you anything this is the marketable security that we had. Interest coming from, right? Let me see, this amount right here, $300 million in the marketable security. And just in case you don't realize what's going on in the bond market, in the short-term treasury bond, which I think that's what we're putting in, right? Although I don't know exactly what treasury bond, which term, they're using. If you look at the treasury bond market, right now, the short-term one, you actually earn 5% a year, right? At least if I'm correct in my analysis on that. See, 3-month treasury bond right now pays 5%, right? 6 months is 5.17. 12 months is close to 4.6%. So at least those money is working, on top of what the revenue might comes in the next quarter here. We all know that, quarter 4 is the best quarter for this particular company, right? Because again, history tells us that. And I'm not the only one who project that we're going to be positive here. I think I showed you the Wall Street projection already. If you want to kind of revisit that, look, Wall Street projection for next quarter is 27 cents or close to 70. I'm sorry, 28 cents per share, right? What does that mean? It means that for every single shares, if I'm doing this correctly, so correct me if I'm wrong, that's 28 cents per share. That means $85 million $85 million in the plus side. That's the estimate, right? Can we beat that? Hopefully, yes, we can. But even if we don't beat it, we're still positive by whatever. You see what I mean? And so, really doesn't matter because, again, yes, we're trying to make money here, right? Each and every quarter, so that we're not in the negative. We're not burning cash anymore, like people are saying left and right, without even check to see the facts, whether that's right or wrong, Winthrop is on the wrong side of history. I'm buying GameStop call, brother. Okay. Well, I mean, whatever you want to do, that's on you. Tradings, of course, it's very, risky. So please don't take any advice from, the comment section or anything like that. Just do your own research first, right? Before you invest in those type of security. Just a, heads up here. Whatever direction you think it's going to go, that's on you. If you want to bet up and down, again, if you want to play it like a casino, sure. I mean, make sure you know what you're doing so that you don't lose your life saving here. But anyways, like it's one of those things where, you have to make it a habit to always question what you're being told here. If you're being told that this company is shit company, why? I don't see that in my experience at this moment. All I'm seeing is that leadership has been doing everything they can to turn this company around in the right way. So if you look at the stat here, right, growth, of course, like they're always bringing out the top line revenue here without really tell you the other side of it, of things, right? If you're just worried about the top line revenue, you might be spending more money, that you have to spend, because again, you don't want to burn burn your money quickly more than you make it, right? So my point is that it's not what you make, how much you make, it's how much you could keep at the end of the year. That's matter, right? And how much you could keep should go up like this. And when you cut down expense, or cut down top line revenue, but yet you get to increase the gross profit, it means something, right? Now, hopefully you come into the right conclusion. I have my conclusion. Hopefully you see that number and then you just think to yourself, okay, what does that mean? If they cut top line revenue, but then, gross profit goes up, right? Does that make sense to you? And what are they doing right that makes that happen? And why somebody just keeps saying to you that this company is shit when they're actually making money. That makes sense. 4 quarters in a row already, right? And if you do a 1 year swing right here, that's $500 million swing right there. So what are they doing right that offer that type of, what is it? Cash flow positive, or cash flow on the positive side, so to speak. Hello everybody, thank you. So let's start. Option are gamblings, yes. Decade investor, yes. RC gets to gamble Abe's money. Why can't I gamble mine? Okay. If that's what you think, that's on you. I don't think he's gambling. He's trying to save the asset. Why else would he still have the cash balance here, right? What do you mean by gambling? It's like you make no sense whatsoever. You can gamble yourself money, sure, and do whatever you want to do with your money. Ryan is undefeated. Well, he's human. He's still fallible, in my opinion. So I'm not, currently, yes, I agree with you. But, sometimes, you fall and then you get back up. And hopefully you get better. You get stronger with those mistakes that you make. He's human still, there's mistakes that's being made, but again, it's not costly to the point where, he loses billions of dollars here worth of asset that we don't know about. Everything that has been lost has been paid for, so to speak, right? And so, but again, in my opinion, of course, anything that's on the blockchain, it exists forever, right? But it's remained to be seen. When it's closed down, I will go ahead and open my wallet to see if my asset is still there, right? And so, to me, it's just the regulator here. They need to work out whatever they need to work out, and then we're gonna product fit into whatever it needs to be fit into. And we're having players coming out, hopefully within this New Year's, quarter 2, quarter 3, right? Or quarter 1, who knows? Once it's coming out, that's what we need to go by. But for now, nothing changed, nothing whatsoever. I want to invest in RC Ventures. Yeah. Can you? Do you have the ability to do that? Do you have $1 million asset in liquid form? I think you have to be an accredited investor, right, in order to do that. I also invest in the North Star ETF. You have an ETF? What does it consist of? Bitcoin? That's interesting though. But yeah, so I mean the balance sheets, obviously we know nothing changed whatsoever, and that's why I always say, point it out. Balance sheets, it's important. It's an important step to go into, and make sure you're familiar with it. So I showed this one before, Wall Street estimate 28, and of course that's quarterly. If you want to do an annual, so this fiscal year of 2023, after the earnings, we're going to come out around 11 cents, for the whole year. Okay, so positive 11 cents, meaning 11 cents times whatever the float is, or issue shares, so to speak, $33 million in the whole year. So again, still in the plus, right? So hopefully, no, I said hopefully, but I have a feeling, okay, another feeling. I keep saying that because, again, I don't know the actual number, right? It could be wrong. It's like, unless I see the number, it's a lot, more clear for me to kind of like assess in that way. So if I'm seeing, it's trending in the right direction, that's what I'm hoping that it will trend that direction as well. But again, nothing, past performance is not indicative of future performance here. So, just be aware of that. Let's see, what else do I want to talk about? So, Joe Rogan, like, I feel like, yes, we need to get Ryan Cohen on Joe Rogan, right? That would be amazing. Or even like that show, Lex Freeman, yeah. That would be cool too. But I don't know if Ryan Cohen would be out for that, honestly. He's not there like Elon Musk to try to promote anything of GameStop. I think he's just wanting to work. Work is sexy to him, right? Meaning like he's solely focused on GameStop right now. Not quite sure what's going on there. Oh yeah, they need access to the to the water hose, so that's why you're not supposed to be parking in front of the fire hydrants. So let that be a lesson to you all. Next time if you consider parking there, it's a public service announcement over here, you guys. Does RC have a plan? I think he does. He just doesn't want to tell anyone right now. The plan is player. Have you heard of that? And I'm sure he knows that this is coming. That's why he built a different platform. That is probably suitable for non-crypto or, but again, like until that comes out, we don't know the exact plan, but that's fine. RC plan to ball out, snapping necks, and cashing check. I don't know about snapping necks though. It sounds violent. I'm sure he does. I mean, we trust him. I trust him. Many people who invest in this company trust him. Yeah. I mean, if we don't, we would not have held until this time. Or buying more, right? So, okay. What's L? Any question? Other question? Player, yes, it's dead. Okay, how is it dead? It hasn't coming out yet. Just like wallets and what is MP? Marketplace? Okay. That's your opinion, I appreciate that opinion. It's not in my heart. No, player is fine. Player, it's still a developing stage. Yeah, until it comes out or even fail, okay, well, we'll try it again. Who knows, right? Until it comes out, what am I to say? Somebody's slipping on ice. So currently, obviously, they're promoting, whatever in-store discounts and all that stuff. So they're working actively trying to get people to shop, and of course, take advantage of all of these great, gift cards and VR, buying all of the gaming stuff, right? They're here to make money here, right? And they're actively using this platform in order to do so. I see nothing wrong with that. Be more, are you a gamer? I wouldn't say I'm a hardcore gamer. I play games. I'm like a PC more than a console. Like I hate the controller for some reason. I'm more a keyboard mouse type of person. I just feel like I control the character better that way. So yeah. But thank you for asking. How about you? What do you play? Wasn't there a tweet of Brian Cohen tweeting in China? Or Chinese, sorry, he's Japanese, saying that he wanted to meet up with certain CEO of Nintendo Wii. Am I saying that right? Hey, my life, Nintendo. So maybe there's a partnership up, or a buy up of the company. Who knows, right? Why would he express that in his tweet? But hey, speculation. I'm allowed to speculate. Player website redirect you to the NFT marketplace. Shut down page. Okay, it's dead then. All right, let's move on. Sure. Play marbles? How old are you when you're playing marbles? Sounds like what? The 80s kids? That's funny. Yeah, I used to play with marbles too. But that was back when I don't have money whatsoever, back in Cambodia. We play with marbles because we don't have money to play with something. Hopscotch and, throwing shoes around. So how can GME grows its business? Well, currently they're selling stuff, right? Retail. Future endeavor, there's always opportunity somewhere. Right? Selling more controllers. Yeah, if they can, just try to capture as much as they can in that space, right? In the retail space. And also they have the ability to buy into companies now, right? So it's a holding company, so that's the growth aspects of things. We have $1 billion in cash to do so if they choose to do so, but the possibility is endless. Okay, again, I can't speculate anything because again, I don't know what the plan, so to speak, right? Because I'm not leadership. I trust that Ryan Cohen will do the best he can, and if he doesn't, it would show in the balance sheets. Okay, so the growth of the company comes from the opportunity that lies after the crash, I think, right? And if without the crash, and here's another thing that I was thinking about too, is that, because I'm sure he's well versed of what's happening in the economy, and he's pretty good at managing the money that he had in his personal money, he's going to treat this as his personal money as well. You know, if you heard anything about him making the statement of, you know, treating companies' money as your own, you would realize that yourself, that he's not going to F up because he wants to blow it up on whatever. You know, you're saying that he's gambling on something. What is he gambling on, you know? And I'm sure, you know, he's trying to do it responsibly. And you see it on the balance sheets. Like, if you're complaining that he's actually able to swing a $500 million in a year, I don't know. How well do you want him to do? Like, what is sufficient for you to say that this company is actually good? Selling more phone chargers. Be more is really appreciate your oh, thank you. Winter, do you work for Wedbush? Diminishing return is the only Ryan Cohen has delivered to Onward. Yeah. Diminishing return. What do you mean by diminishing return? Please explain. Because I'm not seeing the evidence of that on the balance sheets here. What metric are you using? Is it asset? I mean, everything is going up, right? Shareholder equity, okay. How? I mean, I'm doing a trailing 12 here, okay. If I look at the shareholder equity, okay, it's down by $4 million. Like, okay, diminishing by $4 million in a year. I mean, okay, if you want to measure it, what is this? Quarter 4. Okay, this is quarter 4. From quarter 4 to now, what is that? Okay, let's see. What's that shareholder equity? Let's do the math together here, just in case somebody doesn't know how to use a calculator. Okay, that's $59 million loss in 3 quarters. Okay, hold on. Is this 3 quarters? Yeah. $59 million in shareholder equity loss, diminishing return, okay? So that's the only diminishing return that I'm seeing here. But if you look at a year, okay, this is a metric that I'm using right now. Maybe it's a wrong thing to use. But year over year, it's actually increased, okay? So I think 4 quarter worth of data is better than 3 quarters worth of data, don't you think? Like, wouldn't that be a better data point to go by? So if you were to do that math, okay, once again, just in case somebody doesn't know how to use a calculator, there we go. So that means they increase by $18 million a year. Now, $18 million may not seem anything like, you know, to you, but, you know, that's pretty. I mean, at least they're not burning, you know, anything. Please be respectful while my lady speak the truth. Thank you. I'm nobody's lady here, okay? So North Star, be respectful as well. So I'm just kidding. No, so I mean, it's just, again, diminishing return. What are you talking about? Yeah. Let me see. What is this thing right here? I mean, look, working capital. It's pretty substantial here. Okay, there's some loss here, but that's like 50 million. Is that 50 million? Am I doing the wrong math? Okay. I mean, working capital to be positive, close to $1 billion, that's pretty good. I mean, that's a dream more than most companies out here. That's like half the, working capital of negative. What is the biggest working capital negative if you look at the biggest company out there? Let's look at Amazon. Or how about Best Buy? Hell, there's different, the same sector here. So Best Buy, okay, they have income. Okay, $1 billion, they're pretty good, sure. But let's look at their working capital real quick. Look at this. In the negative. Okay, what is a working capital? Working capital is the amount of money available to a business to conduct its day-to-day operation. Okay? So, for Best Buy to not even have a working capital of positive, what does that mean? It means that they are in trouble. That the current asset that they have does not match up to their current liability. Okay? So, there you go. Why aren't you saying that Best Buy has a diminishing return? Right? Oh, Marantz. I hope this is a real Marantz. You're not the impersonated one. Thank you so much for joining. Ignore this, Gio. Yes, I'm doing my best. Diminishing return. If the stock hits $1%, what does that mean? I will be licking my chops. $5? Oh, okay, $5. Okay. Yeah, it's possible. Anything possible, right? Up until this point, of course, it could, drop it down to that low. But again, people need to look at the balance sheet the correct way. And that's due to Moran's, teaching and all that stuff. And that's why I'm so appreciative of him every time he's, making video, making good content for people to kind of hey, maybe these people who's saying that there's a diminishing return, like Windrop over here, I don't even know how to say your name. Is she pushing for someone to buy something, Marantz? After all this time, you do know this. Well, it's up to you. Again, we're making a decision here to buy into the company for a reason. Because we disagree with your analysis, right? I'm sure you are a trader here, right? You're not really an investor. So you don't have the same lens as we are a long-term investor here. We're looking at a different metric here because, you keep saying it's a shitty company and all that stuff. Why? You have yet to give me the metric to use for you to say that. Leave Marantz alone. You're on the wrong side of history. Yep. Marantz, he's great. So he's, we know what this company is, in a sense. So, but yeah, look, Best Buy. Come on, what is this? If you look at the, let me see. Okay, PE ratio supposedly 10 PE ratio, it's actually overvalued, right? Traditionally. Retail, of course, you have to know the sector that you're trying to invest in or comparison. Let me see. What other metric? Okay, at least they have some, inner shareholder ownership right here for the insider. AMC is 0.0 something, right? Not even 1%. So at least they have some, in the tens. but institutions are owning this, in the mass. Let me see what else. Operating income, at least they have some net income coming in. But if you look at debt to equity ratio, you would see that they have more debt than the actual equity itself. Okay, they're not in trouble in the moment, but at least they have earned enough to cover their interest payment. That's a good thing. But the debt is still there, stunting their growth, right? I mean, look at the profit margin right here. It's razor thin, and of course, like Gamestop is thinner, but we're trying to get as high as possible, and that's why cutting is important. And we've been cutting for 3 years already, slowly, so that it makes sense. While everybody right now is just stampeding to cut costs when they should have been cutting it 3 years ago, like Ryan Cohen, right? So again, he's doing the right thing through and through, in my opinion, honestly. That is not really Moran's, really? Okay. It is a shield burner account. Okay. I don't know. It seems like it's the real one, but hopefully it's the real one. If not, okay. It speaks to the character of people just, coming in here and claiming to be the guy. But we know who Morantz is, and, thankfully he making good content for people like me to consume, obviously. DFV at least show his position because he was honest at North Star. What are you talking about? Okay. Why are we advocating to show people position here? It's like, it's really okay. Speak up, fake Moran's account or forever hold your peace. Moran's hides his and ignores bearish thing about the company. Yeah, we're aware of the bearish position here, but again, I don't know what metric you use. So far, you're telling me Ryan Cohen is gambling, right? Our money, which I don't see any evidence of that. Okay. There's no SEC filing that he's been buying any company that is out of like the realms of the possibility. So there's no evidence of that yet. Unless you have something that I don't know about, then speak it. Tell me about it. Present your your bear case, whatever it is. Morantz is a good dude, and he does show his position. He got 51 shares. Yes. He fixed. Sorry, my eyes. I just learned how to read a couple of days ago, you guys. Sorry. They fixed all. They fixed all the bearish stuff, and you are all FUD, bruh. Bimo, do you have traditional? Do you like bonus? I like the traditional. Yeah. Just more flavors, and because the boneless one, it's just like too dry. How about you? I bet you like to eat. Be nice, please. Okay. Who's all clown calling fake? Alright, you guys, come on. Be an adult here, please. It's like I'm looking for an adult conversation here about how, like, again, present me some numbers here. I'm dying to sink my teeth into that, because people are just like spewing again, like just speculation in my mind, right? But I want you to present me something that, I could be like, oh, okay, you've got a point there. Don't just tell me, oh, Ryan Cohen is delivering this or is gambling with your money. It's like, what? Like, are we 12? What's happening? Okay, I think I know the real one when I see them. Okay. Alright, I don't know what you're talking about here. So, as far as like any other topic, honestly, I don't, plan anything yet, but I know Lionel wants me to talk about Medicare here. I think I'm gonna make a different separate video on that one because it is pretty important, and this particular one is actually a good resource, Lionel, if you want to learn more about that one. She has a few videos there that I kind of disagree with what she is, but again, like, she's probably more well-versed than I could ever. I'm just starting to learn about Medicare and all that stuff, due to my immediate family who needs some help on that, information. So I'm all about information here. The right one, obviously. I'm trying to make the best decision for my own financial, endeavor here. So, anyway, and then if you look at, I don't know, let's see, I'm running out of topics, you guys, so, okay, there's burner accounts, okay. See, it's a smart and prudent investor. Yes, I agree with that, ever since he was in Chewy, I could see his work ethic, and, it seems like a good guy to stand behind, from what I see so far. He's not there to give you any hype of himself. Like, hey, if you want to invest in it, see the number, you like the number. He's all about showing you what he can do rather than what he will do. He could say to you, it's like, and that's why earnings call, to me, it's useless in that sense that, words could lead to some misinterpretation here. But at least if you show them the balance sheets and just work until, work at the balance sheets, at the very least at the fundamental level here. And, you show people much more than you could ever said, right? It's like painting is worth more than 1,000 word type thing, right? One painting is worth more than 1,000 words. So the same way, data like this is worth more than 1,000 words, in my opinion. You could say, next quarter I'm gonna go through all this stuff, but again, until you see it on the balance sheets, nothing matter. I don't think that the real Dart or real Moran, that's a real Dart and real Moran. Just a burn account show. Okay, I'm sure, there's a lot more people. But usually Moran's does say I'm here, and he's... can I click on that? What does that say? Go to channel. Yeah, I think that's a real Moran's. Cool. He's watching, you guys. He's watching. So there you go. I'm assuming that was a real Moran's, but that's pretty cool. Let me see. Ryan Cohen is a good guy, and he loves animals. Okay. Well, I think that's pretty good assessment there. I don't, again, like when I looked at his interviews, and I've shown it on my channel before. It's like the interview on the Chewy. I don't even spell the guy's name right. What the hell? Cohen. I mean, like, this type of leadership. Let me show it again, just to revisit. What the heck is this?
Business, and you look at what Amazon's doing. Why are you doing well in the market? What's happening here?
Yeah, well, I think the world has changed a lot from the days of Pets.com till today. And so, the market back then was underpenetrated. People weren't shopping online. Today, e-commerce is a way of life. People were scared just to put their credit card information online. Then also you have the humanization of pets, and people have, moved up market. And so ASPs and the margin structure has moved up. And then you just have the shipping density, where shipping as a percent of revenue is a lot less today than it was in the past. And so we've really built a business where this is a category that focus is incredibly important. And so, we do all of that flywheel of fast shipping, price, being competitive. That's all, basically table stakes in e-commerce. But then when it comes to being the category experts, right, you want to know what's the best weight loss foods, grain-free foods, you call us. We know the product better than anyone else. We're the best in the business.
When you started this, though, come on, you had to have the skeptics lined up around the door and not so many investors thinking, Ryan, you got to be kidding me. This isn't going to work.
We didn't have.
You see, like, you gotta be kidding me, right? And what makes you think that he's not gonna replicate that again? Again, let me just preface this by saying past performance it's not indicative of the future performance, but at least he has some track record there. Again, like, investing is all about speculation, like forward thinking here, right? But for some reason, for this particular type of investment, like this one, I can't even say the name, Gamestop right here. They want you to think about the past 10 years, like, oh, they used to be terrible, oh, they used to whatever, right? But for every other company out there, it's always forward projection. It's like, SoFi, oh, they're gonna post this positive earnings. Like, okay, how about GameStop? It seems to forget about this forward projection for this GameStop thing. And even though there's evidence to show you otherwise, right? To show you just that. Even Wall Street too. I mean, come on. It's like, it speaks to the news that's coming out. And even when they're like in this particular one, I hope you understand what I'm trying to say to you right now, because this one right here, this right here, this quarter, when they only show $3 million per quarter, but $8 million in the trailing 12, they were misreporting it, reporting the last 9 months worth of loss, right? That's why they show 18 cents loss versus 0 loss whatsoever, right? And it's intentional when they do that, because they don't want you to project ahead of time. It's like, okay, if they only lose $3 million this quarter, what are they going to do next 4 quarter? The 4th quarter is the best quarter for this company. Do you realize that? And if you don't realize that, then I don't know what else I could tell you about this company, because again, you're just buying into the propaganda of the media, right? And that's not good for you. That's not good for anyone who thinks that way. Remember, what is it, Yahoo Finance, right? Brian Susie, before this, when they were losing money, they were using a 2-year-old data, to show you, oh, they used to lose money. I say, okay, I thought the stock market is about forward projection here. What's happening? Like, why do you have a forecast of, like, really just one person, just one particular firm that is willing to give this company anything? And every single company or media outlets out there using the same data to go buy this, to evaluate this company. Yeah, I mean, if that's not a red flag to you as an investor in or looking at the data point, I don't know what is. You see what I mean? So why such a misconstrued way to report on this company's earnings? It's beyond my belief, right? That a multi-million dollars news media would make that mistake. See what I mean? And only correct it in a 1 minute segment, like that nobody really cared to watch whatsoever. And again, like they do this intentionally, which is fine. Look, if you want to keep the price down, and okay, long-term investor like me, salivate at this price point right here. And because I don't need the money right now, right? And I'm planning to put more away because I'm working, and the fact that I could do that as much as I can until my thesis is right. That's a blessing to me, Yeah, I might have to wait maybe 10 more years, but okay, by that time, Big Mac is going to be what, $20? And GameStop, do you think GameStop is just going to be $14.75 in 10 years? Yeah, good luck trying to buy GameStop at that time with the growth that they have. Like even with the growth that they have of $84 million a quarter here, or even $33 million per year, it's immensely, it's like the amount of money, like if you could make that much money in a recession, that is still a plus, right? At least you're not at the whims of whatever the rate hike is because you don't have any debt, number one, right? Number two, you don't have no matter what the rate is doing, you stand to benefit from that, right? If the rate is low enough, you could just load up on debt and then try to expand that way, right? They could do that. And then also too, if the rate is too high, you don't do anything with your cash. You just sit on that cash and let it accumulate interest. So no matter what with the rate hike, the rate cuts, it doesn't affect GameStop in any way, right? And GameStop will expand. They will. Okay, well, we'll see 10 years from now. Mark my word, and I hope you still be here. GameStop will be here. AMC and GameStop are both good investment. Not AMC. No, I never said that. And if you think that, okay, go ahead, buy AMC on your but these two are not the same thing. Okay, lots of fake account. I have to go. Be more, keep up the great work. Oh, thank you so much, sir. Appreciate you. Okay, GME won't exist in 10 years. Sit on cash, aka have no plan. Well, again, like, what is the rush? What is the rush to use that cash, Okay. If you think that it's not going to grow slow enough for you, then don't buy into it, Just keep speculating on the price movement and short it. Like, if that's what you want to do, then do that, I have no, qualms about that. So it's remained to be seen, if the data keeps showing me that they're trending in the right direction, just doing the basic thing, like, at least make the profit margin, to the plus side. And slowly, yes, they've been, EBITDA positive right there. Right now, we just need to have the EBIT, this metric right here, positive. In 2 months, we'll see if they could achieve that. If not, okay, let's see what's the benchmark is, right? What can they achieve in a year? So with this type of data, I have yet to say that they're going bankrupt. Even this score right here, there's no risk of bankruptcy. Anything above 3, that means no risk of bankruptcy, right? Interest payment right here. That means that they have enough to pay, whatever they need to pay. We want it to be 3, but the reason why it's 1 is because I guess they accounted for the total debt here. But even then, they have enough cash to cover the total debt right now. So it's not an immediate need to go to the shareholder in order to cash out, so to speak, right? Dilute the shareholder here. So there's no rush in that. And also too, if you look at the operating expenses right here in a year, let me see, it's like a year. Let's see, operating income. We still have to make sure that this is going positive. Hold on, this is a trailing 12. This is every year. So they've been kind of trending in the right direction in $73 million, right? If I'm doing my math right. But if you look at the operating expense right here, the cash that they have, could carry them through a year worth of, if they are burning that much a year. But of course, next quarter is going to be better. But if you look at the previous earnings, they're trending in the right direction. So if you keep saying that, revenues keep going down and down and down, then why wouldn't you think that the trend will trend, the expense will go down as well? See what I mean? And then if they're trending up on the gross expense, they do something right here, It's not like they're there to burn anything. Hello. I'm not sure who you are. Gypsy Fish. Wants them to run out of cash so that his dream comes true. Right? Of course, they want them to spend that cash right away. And that's the playbook of Adam Aaron, right? What happened when they spend that cash right away? They have to go to shareholder in order to raise money from shareholder, diluting them and all that stuff. So again, sitting on cash is doing something right at this moment, because again, makes no damn sense to buy anything in a rush when everything is overinflated, right? And even the companies out there that are in trouble right now, like Best Buys, for example, again, I'm not saying they're in immediate in need of cash here, but from what the metric that I'm looking at, they're not doing pretty either. Look at the working capital. Look at the net cash right there. They're just, again, they're not operating at a higher level here. The amount of cash that they have versus the amount of debt that they have is, net cash, make their net cash position in the negative to the tune of billions of dollars here. So if you look at the definition, there is an indicator of financial position of a company. So if you have negative, it just means that it's in a dire position here to raise cash in order to, do the day-to-day operation. But then CapEx right here, this is what they need to at least, survive. If you could make the CapEx, you're fine at the moment. But if you don't have the cash to do it, which they're $200 million short in cash here, they have to go to the shareholder for that. Now, thankfully, they have some asset here for Best Buy. And, they have some cushion there, but shareholders going to be diluted, So, again, they have some shares here. At least the float is smaller than GameStop. That's good. But I don't know how many they will be required to sell in order to, prop up the balance sheets here. and moving forward, right? Let's see, for this one here, forecast, obviously there's 14 analysts here who's willing to at least look at this company, but for some reason one analyst of course Wedbush is right here for you to hold Best Buy. Okay, that's important place to look at. Of course, this one they want you to buy, right? Hold. So yeah, it's a neutral position here for Best Buy. But anything, you know, I'm kind of have a bias towards Wedbush analysis, because again, like, I don't think they're being honest with what they're telling you, at the very least, about GameStop anyway. So that's just my analysis, right? My observation. So you might have different opinion. There's no signs of growth either. Okay, 500 million plus spent on. Okay, it's the money that they have to spend. It's like, that was like 2 years ago. Again, it's like, at least they're trying something, right? So if they spend $500 million on the NFT marketplace, but then they have a positive swing to $500 million on the balance sheets on the side of cash flow, what does that tell you? That's $1 billion swing, no? Because they spend $500 million to try to expand the company, right? But because of the regulator, I mean, it's not just GameStop here who's affected by this. There's many companies out there that you know, cost them billions of dollars because of the regulator. So if the regulator didn't kind of decimate the crypto market, it wouldn't happen that way. They would have expanded. They would have been able to you know, do what they need to do in order to grow. But currently it's stunted because of the regulator. But again, doesn't mean that the company couldn't do something else in the future, you know. And again, they had no reason to suspect anything of the FTX, because at the time the media seemed to like was fine with it. I'm sure, you know, they didn't realize that, you know, it weren't above board, right? The SEC didn't go after it. So what? You know, the SEC didn't go after it until it's you know, like, people on Twitter was the one who caught the lie. And it's like at one point it was like too late for them to kind of like, oh, it's too big now, so we have to like put a stop to this. And I'm sure, you know, if FTX wasn't kind of found out to be a fraud by you know, Twitter people using, you know, their brain, it would have been still, you know, legal until this day, right? But because people found out about the illegal activity that happened through Twitter, SEC had to step out, had to come out and say, oh, it's a fraud or whatever. But again, they didn't think it was a fraud back then, right? They allow it to come to the market. So whose fault is that, you know? If the SEC couldn't even, you know, go after that platform because of fraud before, why was it exist in the or allowed to exist in the US? So what gives, right? So Ryan Cohen, I'm sure, you know, had that same thoughts and thought that it was above board. Why else would the SEC allow this? And of course, yeah, he's human, you know. But again, $500 million swing on the plus side here, but yet they use $500 million, as you said. I don't know, I have to verify that number, on the NFT marketplace. So that means they actually, if they didn't use that money, they would have had $1 billion right now. Okay, well, at least, again, we're using something to do something better, okay, for the company. Just that my 2 cents. Of course, you could say, hey, I'm just biased here, hopiums and all that stuff, but I don't think so. I have my reasons to believe this company is going to do well. Whether it's going to be around in 10 years, that's up to you to determine. I think so. If you don't think so, then leave. Don't invest in it or short the company. Do whatever you feel best for you for your financial position. But anyway, all right, guys, I have to go. I do appreciate all of you for commenting, and even bear case here. Again, I have yet to see anything of concern at the moment, unless I see the next quarter coming out terrible in some way. I will remain in this bullish case presented. Alright, that's all I have.